Hi guys, welcome to this week's mentoring video. It's July 20th, 2020. Lots of 20s here. As always, we will start with this little disclaimer here. So always remember that this video and the contents of it is just for informational and educational purposes. Only for those purposes. And it's in generic also. These things are, the contents are in general nature. So it's for you to learn basically and not to take advice. I'm not giving any advice to you whatsoever. It's just learning. We are educating ourselves about trading, option trading, markets in general. But from me, you're not getting any advice whatsoever. If you decide to place any of those trades live, it's on your account and not, you are taking responsibility for this, not me. So that's important to say every time. Therefore, I'm saying this, read this, and if you agree, let's just move on and continue with the mentoring video, and we will go to do our usual routine, and there will be some interesting cool trades that I can show you today. So let's just begin. So I will move directly to Thinkorswim and bring this, make this resize. It's to the level or whatever to fit this box first, so you see everything on the screen. Alright, so first of all, you can see that I have plenty of positions here and they don't even fit the screen. Yeah, just because this is my paper account. On my live account I have much less positions. Usually I try to keep it in such a way that it just creates, it's a screen full. Okay, with this resolution it's not a screen full or less. So if I had the resolution of this HD whatever screen monitor, I would not have more than, I just don't want to scroll through it. This barely like fits. So it's a good idea to keep always you know, the amount of position not too big, the positions that you take, like from 10 to 15, you know, that's, I over exceeded it here. But it's just because I see the markets are bullish, are very interesting, and I see a lot of interesting trades, so I want to play around with those as well. So first of all, let's look at our numbers here compared to the previous week. You can see that we are making money, and today is a good day also. We're kind of like making money today as well, really nicely. So you see the theta value got reduced a little bit. That's because last week lots of positions expired or I closed them. They were close to expiry, and I decided to just take my profits and leave them or just let them expire. You also see that my delta is a bit negative. That's just because I hedged my portfolio a little bit. You will see why just by looking at the chart of SPY right now. So I'm very close to zero. I'm still kind of like neutral. It's not exactly zero, but you know, it's getting there. So it's pretty neutral portfolio with high theta. Yeah? So this is what we want to build. We want to have cash flowing portfolios which bring money every day, and we don't want to worry too much about the movement of the market, you know. So this portfolio seems to be fulfilling all those criteria. So let's have a look what's going on the market before we jump into the individual trades and have a look at the interesting ones. And I also have some candidates which you may have a look at and some interesting information about basic materials, basically. This we'll discuss today. So first of all, let's just jump into the charts and see what's going on the market. This is the futures for S&P 500. You don't always have to go to SPY. You can also look at ES or MES. This is the futures. They based of S&P 500 basically show very similar chart, and you can use that also to see what your bias should be regarding the market. So I will go back to SPY because we always use the SPY, and it's less noisy here. I've been trading quite a lot the ES futures, and what you can see here on this chart basically is, well, if I had to draw a pattern here, or I could draw this little W here, And if I kind of like over exaggerate, this could be a kiss hello, you know. So if the W is here, you know, that W stands for win. So it's a win pattern, winning pattern, bullish pattern. And often it just goes or bounces back a little bit of the resistance. And that this point is called kiss hello. And then it just goes bullishly up. So we see this bullish movement now. And it seems like the markets are bullish, but they still didn't pass the old like resistance zone here at I would say 323. So we're waiting for that. If this thing breaks it, I'm expecting a huge move up, you know. So looks very bullish to me, and yeah, that would be my bias, you know. But at the same time, it could also bounce down. So we don't know what's going to be happening. There may be some negative news coming in. Now we're living in these markets where, you know, people talk about Corona coming back. Many things can happen, and we are here at the critical zone of 323. So we kind of don't know. It's very likely it continues bullishly. There is no reason for it to not do it right now, but we don't know, and this is a critical zone. Therefore, you know, we need to be careful. So we're bullish, but very cautiously. And this brings me back also, so I don't forget this. This brings me back also to the point why my delta here is close to zero, or it's very kind of like neutral. Why am I not bullish yet? Because if I had a higher number here, I could probably make more benefits or profits from this. Well, that's exactly because of that point here. If we pass to 323, I will be bullish. So more bullish. Right now, in order to keep this position at this delta close to zero, I sold one future contract on S&P 500, the micro contract, and it brings me delta negative 50, which brings all those to very close to zero. When we pass the point or border of 323 on SPY, which is quite close, I set something like an order to close this position when this reaches 323.5. Okay, and the order stands here and it's waiting, and it's there for the day right now. I probably could change this to good till cancelled, because that's actually what I originally wanted. 323.2, not 0.5. Okay, so, and this is on mini S&P 500 futures, so that's the full price is 3,228 right now. I'm referring to SPY, that's why I said 323.5. So I'm gonna replace this and just place it again. It's a stop order, and I'm just gonna keep it there until S&P 500 reaches that level. So basically passes that resistance, makes it as support, and I expect it to go higher, you know, to even go to 340s. So that's what it looks like to me. And the other reason why I'm thinking like that is because when I look at the VIX, so let's look at our VIX, VIX, our fear index, what's going on here? Well, if you look closer here, we've been in a downtrend. It's kind of like built a little bit of a descending triangle. It passed the barrier of this 200 SMA support zone. It broke down, and we'll see what happens now, but looks like people are having much less fear than they used to have like just a week or two ago. So people are very bullish. Looks like people are very optimistic. There were some news around coronavirus, some vaccines could be the reason. However, you know, I expect this zone to be retested again. So it can come back up. We don't know. We live in volatile markets. The market is still spooked. So if you look at the full picture of VIX, well, this was the normal level. The normal level was below 20. We're still 24s. You know, so people are still spooked. We never filled that gap there. So it looks like it's very positive, but the people are still spooked. So we need to be cautiously bullish right now. So that's going to be my bias. Now, let's have a look also on the news and what's going on the individual, sectors. So let's bring this little, okay, I'm gonna discuss that later. Let's bring our little browser here. I'm just gonna resize it so it fits somehow nicely here. And don't watch this chart just yet. Yeah, so what I was saying, let's have a look at our maps and groups and sectors. But before we actually go there, let's look at what's going on the market. So a little bit of news. So stock market update. What do we see? I just refreshed it. What do we see? I just always scroll down and I look the headlines. Chevron scoops up Noble Energy for 5 billion. Doesn't tell me much. I look at the digits mostly. Dow down, Nasdaq very strong, S&P strong, but not that much as Nasdaq. So technology is up. Dow is a little bit down, and S&P is a little bit up too. They mentioned Chevron. They mentioned Noble Energy. So something about energy space, energy sectors. That's where I need to be looking. Airlines, something with airlines probably not doing very good. What a surprise. And then I just scroll down and look what should I be watching on the industry. Consumer discretionary and IT. So basically technology and consumer discretionary are the ones that I should be watching right now. They're bullish. Weak sectors, staples, industrials and utilities. What's moving the market? Markets trends are mixed. Mega caps outperform. There was some discussion about Amazon early in the morning, exactly here. I checked that before. So looks like JP or some bank, whatever, some institution had high ratings for Amazon, saying that it's gonna go up like crazy, and it was indicated, like it made a very bullish move on the Amazon, so you can see it happening here. And here we have news. Okay, I didn't look down too much. Amazon shares rise 5%. Goldman Sachs, okay, not JP Morgan, raised price target to 3.8K from 3,000. So that's going to be moving market. Amazon is huge part of the markets. So this thing is moving the market, right? So that's why you may see a little bit of bullishness there. More encouraging vaccine news. Okay, so we have positive news on vaccines. Bullish. Okay, all these news are very, very bullish. So that should be our bias, So what do we do now? Let's look at the sectors. Is this confirmed? If we just looked in the groups, technology, consumer, cyclical today. In general, 1 week, we still have technology. Cyclicals are also performing well, not that good as the rest. Basic materials, this is interesting. Basic materials, what are basic materials? This is gold and silver. These are gold mining companies. So, and silver mining, and other kind of materials, so commodities, are doing well. Interesting. We will look into that. 1 month, basic materials. Okay, interesting. That gives me a little bit perspective of where should I be putting my focus right now. So I looked at, okay, I see that technology is doing good, cyclicals are doing good, and basic materials are doing good. That should be my focus. Okay, before I go and put any trades and look or scan anything, I also want to look at the economic calendar to see if there is something going to be happening in the next weeks or this week. So I'm in Forex Factory, I'm looking at this week, and it looks like there is like almost nothing. This is something happening here on the Euro market, European market, but on the US market, crude oil inventories tomorrow, not really much going on. So it's gonna be like not so news rich week. Of course, remember we are in the Corona times, so it may mean, all of a sudden we may get some kind of crazy news that, I don't know, virus is spreading quicker than anybody expected, and we can get a very bearish move, suddenly a lot of volatility happening. But if we were in the normal conditions, this would just mean, well, nothing's going to be happening, nothing crazy news, So we may expect we may expect a bullish move, relatively unaffected by economic news. What about next week? Next week there is a Federal Reserve meeting where they're going to be talking about interest rates again. And it seems, to me, like when you look at the interest rates chart, they were lowered when the corona came over. They like practically zero now. They can't go too much down now. So I guess I expect, they cannot raise rates right now. It's really bad time to do this. Actually, it would be a stupid move. They can only lower them. So I would expect them to stay the same level. So this news wouldn't, be too crazy. Maybe just basically it means more free money. So if these rates go up, we may expect bearishness in the market. So that's what I see in the calendar. Now, going a little bit deeper into the news, I would say let's go and have a look at the gold and silver news, because we've seen that the basic materials are performing well. And when I look at this, the latest news, what I see is a lot of news about silver, silver, silver miners, silver, lots of silver news, silver. Tells me that there is something happening around the silver market, and this asset was highly and is highly undervalued compared to gold, compared to anything else. Not asset, but let's say commodity. Silver is now commodity. It should probably be called money, the real money. But right now it is seen as a commodity and seems to be very undervalued. In the times when Federal Reserve prints currency to the oblivion with no control, things like silver or gold, well, it's natural for them to go up because they maintain value. They're natural hedge to, stuff that is based on thin air. So these news don't surprise me, but what I'm more interested in is the ratios between silver and gold. How do these ratios look like? And I usually look at some news before I start looking in the ratios, how silver behaves and so on, what's going on right now. But I will take you directly right now to TradingView, and there is something in TradingView which you can use. It's called gold and silver ratio. Like you just type gold/silver and it's gonna bring up the interesting chart showing you what is the ratio, current ratio between silver and gold, and you can see that it's decreasing. Like since, what is this, April, yeah, around April, it's peaked to the top where ratio was around 125 to 1, which means for you would need 125 ounces of silver to buy 1 ounce of gold, which is pretty crazy. So it went up like crazy to here, and then it started decreasing and decreasing and decreasing, meaning silver is gaining on value relative to gold at a quite quick rate, I would say. So, there is coronavirus, there is shortages in supplies of basic materials such as silver and gold. But like people are mining, but demand is high. Demand is high. People were going and buying the silver when the corona crisis happened and Fed announced they're going to print into the oblivion. So now we have shortages of this, and people seem to slowly turn direction silver and seeing it first, or recognizing it as an amazing investment, actually, as an undervalued asset. And I think there will be more of that happening. So natural ratio for silver and gold is not at these levels. It's not even at this level. This level is way too high historically for gold and silver ratio. So to give you perspective of what I just said, let's have a look at a broader spectrum, so broader time axis for silver and gold ratio. And if I just take you to a weekly chart and minimize that, I mean like expand this to a couple years, just a couple years back, you can see how this ratio was going up for a couple years, but more natural ratio for gold and silver, rather than 91 to 1, is around 60s or 50s. If you go here, you see it's around 50s, 60s. This area is the more natural ratio for silver and gold. So right now, we're pretty high. And what does it mean to me? Basically, to me, it means that instead of buying gold, I would probably be investing in silver, because I expect this to go down even more, to reach the levels eventually of 60s. So if gold is going up, and it's right now like 1,800 or something per ounce, at least paper gold, you know, because the physical gold is rather higher than that, then, you know, silver is growing with it. But if the ratio is accelerating downwards, that means silver is growing at much higher rate. The price of silver is growing at much higher rate. So to me, it's a fantastic investment. And another thing that need to be mentioned is when these assets, these commodities or the real money grows in value compared to dollar, also the companies which are mining this this valuable asset, this valuable commodity, are growing in value. So nobody really talks about the mining sector or companies that are mining gold and silver, and these have an amazing potential of growth. So for me, it looks like the gold is not going anywhere down anytime soon. You know, people kind of like wake up and see that, you know, paper money is being printed, we're in crisis. There's no reason for gold to go down unless the market's going to be manipulated crazily. So if there is no reason for gold to go down, there is no reason for mining companies to go down too, because they dig it out of the ground, they invest money to dig it out of the ground, and they create something of value. So to me, this could be a very interesting place to look at and trades to look at. And we will have a look on this, what's going on with these companies in Thinkorswim, and place some trades. I probably placed some already, but at least we will look at them. So another interesting thing that you should look at is a little bit of news. So silver hits 20 for the first time since 2016. Why it will go much higher. So just do your reading. It's a Zero Hedge article. Very, very interesting. They also talk about ratios. However, if you scroll down, they also mention something very important. Be aware that before silver commences a big up move in dollar terms and relative to gold, there could be another deflation scare. So they kind of expect that silver and gold may go down a little bit before they actually explode in price. Very important to notice. You know? So don't get spooked off if you invest in these companies or directly in the commodity and it goes down a little bit. You know, just wait and through it, and eventually there is no way for it to just stay low. I mean, that's just a simply impossibility. Unless there's, I mean, there is nothing impossible, but unless there is like, you know, no, in normal conditions of today, it's an impossibility, or subnormal conditions, whatever conditions we are in. So let me bring you back to Thinkorswim, and here we are again. And let me, I think I'm just, okay. Let me bring you to the monitor page so we can go through our portfolio, and have a look at some trades which are interesting. I made a list of trades that I would like to discuss with you in this video, but just to follow the routine, you see I have beta weighted portfolio with SPY, so the digits here are beta weighted. And important to notice again that I'm doing it's a cash flow trade, so it's a theta portfolio. And the first thing that I usually do when I wake up and do the news and all that, I look at the PL Open column and search for positions which are losing. This is my hedge. I don't care. Right now, we already discussed this, that I expect it to either go down or pass to 223.2, I guess, something like this. Well, it didn't, and it starts falling. So this hedge probably starts working for me soon. Maybe not, but it will automatically close in case it doesn't work. So, but then I look and I see, okay, everything here is positive, no need to worry. Cisco 5, okay, this is a new trade. I don't need to worry. We'll probably discuss that one as well. Home Depot, not a big loss. I probably have a look at it, but doesn't create any pain for me. KL Gold Mining Company, it's a new trade. We will look into that. I probably sold the contract way too cheap, but all right. I still don't mind it. Then we have Okta, very little loss. We'll look into that. We have Prudential, $50 loss, but it improved. So it looks like it's going the right direction. We'll have a look at that. SPY is in insurance. Target seems to be going down a little bit. Have a look at that, if this is painful or not. Twitter, new trade, an interesting one which I want to mention here. And then what we see is Texas Instruments, all that's good. Work, it's coming back. So we've discussed that and we've seen that before. It's kind of like long-term trade. I think I have a butterfly on it. No, I just have bought 2 calls on it and sold shorter-term calls to regain some premium. We will look at that. It's a little bit of pain. WPM, what was W? It's also gold, okay, or miners. It's a fresh trade. So you see, I have like lots of trades on mining companies. Look at that. You know, that's what's happening here on SPY. It just has like a little drop. That's a daily chart here. So my hedge, you see, came back to 0. It's working. So let's go one by one, actually, the ones which are interesting for us. So I said it's cool to look at Cisco. It's like a negative number here. So let's analyze the Cisco risk profile. What's going on with Cisco? What is the Cisco? Okay, it's just a short, it's short put, so cash secured put. I don't have any protection. It's not a spread. So I'm actually believing that Cisco will stay above 42. And what does it look like on the chart? I actually think it's very bullish. And I see the earnings are coming soon on the 18th of August. And this trade goes until 7th of August. So it expires before the announcement of the earnings. So I'm probably gonna just cash in $140. So it's a small amount of money, but with a high probability. As you can see, probability for me is like 90% to win on this trade. I don't mind if somebody pays me, you know, in just how many days? 18 days, $140. It's all right. So you can see that theta on this is $15 per day. That's pretty cool. I like it. I don't need to do anything with it. Scroll down, scroll down. KL, this is a mining company. KL, I think it's pretty, no, it's actually quite expensive. You can see how the miners were performing. You know, they had this, the patterns kind of creating cup and handle. So it's like this. So to me, it is bullish, and they have an announcement of earnings coming soon. So I didn't mind that. Announcement is on, oh yeah, so on the 30th. So we still have some time. We will see, right? So what's gonna happen after the announcement? Probably it's just gonna skyrocket or maybe move a little bit, you know, sideways. I don't expect anything bad happening to miners. And this particular one is a quite rather expensive stock, and I promised to buy at 42s. I wouldn't mind to have it there. Even if I get it, I would like to hold it and sell calls on it. So my strategy was, that's why I basically just sold the put. You know, but the probabilities tell me that that's very, very highly unlikely, so I'm just going to keep 140 and that's fine. Let's move down, KL. Then we had the Prudential. What is Prudential doing? I probably was very bullish on this, or bullish. Let's have a look at analyze. What did I do? No, I was bearish. So on the Prudential, so I basically sold a short call, vertical. So we have a spread here with some protection, 2.5K at risk, but probabilities are really cool for me. So I just have like 14-15% to end up on that side. And it looks like it's weak. I mean, like so what did they promise? Let's see, Prudential, I promised to sell this stock to someone at 72.5. So before it gets there, it has a pretty long way to go. And I see this as a resistance here at 70, but it also has a resistance here at 65. It's quite a long way to go for a company which is in sort of a downtrend right now, or sideways trend. So we don't have many days in this. It's 32, like it's a month. So we do have some days. We will see how this goes. It can be an interesting trade. The max profit on this is 200 bucks. So not too much. It's an interesting play on a bearish kind of side. Prudential, SPY, it's our insurance. Target. What is this target doing? Let's have a look at the target. TGT. Looks like it's moving sideways, and today is a little bit bearish day. It's above all the moving average. I think it will bounce off this 50. I guess my goal is to go to 125. Let's see. Analyze my risk profile. Yes. So basically, I bought one call, which is not performing well right now. I'm having a little loss. But to compensate for that loss, I also sold the call for a shorter period of time till 31st of July. So it expires soon. And this brings me a little bit more cash in. So I'm like very little loss right now. And if this decides to move anywhere above 121, this is my theta switch point, more or less, 120s or somewhere here is theta switch. The time starts working for me, and I can keep selling these short-term calls on it to further reduce the amount of premium that I paid for it. It's just very little, 88 bucks, but you know, it brings some money in. This trade goes for 88 days, so we still have a lot of time in it, and market is bullish, and I think target can go up. What's next? Twitter. This is a game that I wanted to talk about a little bit longer. So when we look at the Twitter chart, you can see what's going on here. So first of all, we see a big cup and handle bearish movement. That's even a head and shoulders. I don't know, it looks like a dick, but that's the head and shoulder. Imagine this head and shoulders. So in head and shoulders, the potential, okay, that's the shoulder was not really nicely drawn. I mean the resistance zone. So we have a inverted head and shoulders on this, and to me it suggests that about this amount of movement can be expected the other direction. So somewhere here, meaning we will end up somewhere at this level, which is like, well, is this 42, 44s? You know, basically the length of the head, you know, from the shoulder would indicate how much potential there is for an up move for the stock on the head and shoulders pattern. However, interesting is also this. At the moment, we have upcoming earnings for this company, so things may happen. The thing may go down as well. If the earnings are shit, you know, we don't know what's going to happen after earnings. This is like the most unexpected area of the trade. It can go up crazy, it can go down, it can stay the same. So how to play this? Okay, we also know that if the earnings are coming, we also increase in volatility. Implied volatility on Twitter increases. So volatility is going to be high. Sometimes, not very often, and I don't recommend it to anybody, but sometimes when I see a bullish candidate like this, and I know that the implied volatility is high and earnings are coming, I think I would like to sell some contract very short term to make money off, you know, in a couple days of the volatility. So if I just bring here, let me do that quickly now, implied volatility, imp volatility chart on this, you will see it didn't jump quite yet, but before earnings it usually is high. You know, it's higher than normal. It's not that real for the you know, because of the corona crash here, this chart got a little bit affected, but typically before earnings this increases, then it drops. You know, you see this little drop here, then before earnings increased and then drop. And here we will have the same story. So I expect a little bit drop of volatility. Volatility is now at the level of 0.70. So I expect it to drop to the levels of like 0.30, 40, and I want to profit from that. So what I did is a little trade for a very short time. Twitter, 4 days. Basically, it's just a 4-day trade to collect premium. All right, so what you can see, it's quite fat premium because just today, theta for this trade is 61 bucks. So in one day, it makes 61 bucks. So what did I do? What kind of trade it is? You already seen it because I opened it, but let's go to analyze. And when we look at the Twitter, you see that I sold a vertical put. Again, very simple vertical put sold with quite high risk of 5,000 bucks if things go really badly for Twitter. But actually the area of where I start losing is at the level of 30s. So let's do like this. Let's set the slices to break-even point, and let's indicate that on the chart and break set to the charts. And we see now what needs to happen in order for this Twitter to start hurting me. So you see that after the earnings, Twitter would have to drop to the level of 30 to start actually generating pain to me. And I think this is quite a solid support zone. And second of all, we have a 200-day moving average around 31.80. So what I would expect, if the news are really negative for Twitter, it can fall down to the level of this support zone and bounce back, and not really go past that. And even if it does, it has another resistance zone or support zone which it could bounce off. So we have a kind of like double, security on this trade, and it's just 4 days. So it would have to generate 4 candles like this in order for me to be hurt. So I think it's very unlikely to happen, but options are priced very well. So I went into that trade, and now I'm just expecting that this never goes, after the earnings, never goes to this low level. What happens if it does? I'm okay to have the Twitter, but I will also be able to manage that position. I will set an alert at the level of 32 right now to be notified that Twitter needs to be managed. So I will just set it to 32. Oops, Twitter failed after earnings. Look up if something needs to be done to the short put spread. Okay, I create that. There we go. And now I can sleep well. So 4 days, in 4 days we can make a profit of 150 bucks. Not bad. So we were kind of like nicely paid per day. So by the end of the week, we will know if we keep that 150 or not. So that's the Twitter. Now another one which was hurting us was the work, and I wanted to talk about this as well. So what's going on with the work? Work is sort of a longer term trade, and I was very bullish on it. I bought 2 calls, and I also sold some protective calls on work, and I think it's in a shorter term ones. So if we look at the Analyze tab again, the risk profile, and we go and select work, and I will turn off that short-term call which I sold. It looks like it's not performing well. We're actually having a 270 bucks loss on it. The one which I sold short-term till 31st of July, they expire here. They generated a little bit of profit back, so 71 bucks, reduced the cost of this trade, so twice 71, 142 minus twice 4.6, so 460, 920 minus this. That was the cost. That will be the cost of my trade because this will expire. And my expectation is actually still that the work will go up. And why? Let's look at the chart. So what you can see here, the work wall is above all the moving averages, and it had a big run here around this time here. And then it had a big gap on earnings. So you see earnings can be kind of dangerous, regarding the Twitter. Things can happen, like things like that can happen. And then it kind of like bounced back up, bounced back down, and it generated this little W pattern, which it does a third time, kind of like kiss goodbye again from this level. So I expected it to slowly fill that gap. You know, this gap needs to be filled one day. So since I have time in it, I'm okay to wait. And my plan is that as soon as it passes this area of 40, I'm going to sell 2 call contracts at the price at which I bought my contracts, meaning it will bring my trade to a zero risk trade. Actually, it will not be just zero risk trade because I got paid by the short-term call contracts which I sold, so it's going to be a positive trade for me. It just needs to pass this area, and I have zero risk in it. So that's the plan, and I'm going to stick to the plan for now, even though we are in a little loss. You can also see that on the chart I have a little alert here at 30. That's basically where I would exit the trade. But it's not going anywhere there. You know, it was close, but it didn't pass it. So I'm still in the trade, and I'm just going to be waiting now. And I have time, so I have 60 days on it, and that's fantastic. So let's wait and see. So what I mentioned before to you was how cool the gold mining stocks can be because of the basic materials sector going up in general, and how it could be a good investment. So one of the best performing trades here for me, you can see, is NEM. So that's a mining company, and you see it generates quite a big win for me in this portfolio, basically half of what we have here, which is partially the reason why this is so high. And what is this? This is a mining company. What did I do here? If you remember from the previous 1 week ago lecture, we were talking about synthetic long. So I have a synthetic long on NEM. So it basically acts as if it was a stock. So if we go and analyze NEM on this NEM, Newmont Mining, you see that I don't only have the synthetic long on this, I have also some other contracts. But what are these contracts? So one of them is simply a short put because I wanted to acquire actually the stock, but it didn't happen at 55s, so it didn't happen, and now this thing's gonna expire. I'm just gonna collect a premium of 530 bucks, pretty cool. Then I had a spread. It goes until 7th of August, and this spread is like 680. It's gonna generate me the same also. So I have quite a lot of money just with those spreads. You know, they bring me all together to 1,000 bucks. That's pretty cool. So, but the best position here is this long, the synthetic long. And this guy is already generating alone 459 bucks. So you see, it behaves like a stock. And right now I am at the position of a nice win. I could exit this trade right now, but I think it's going to be more bullish because gold is very bullish right now. You can see this also. I always look at the futures of gold, and now it's 18.70. It was a $7 increase today. So gold is going up. I don't see any point to leave this trade when gold is being so bullish. So I'm going to stay in there, and at some point of time I want to sell a call contract which will bring me to the sort of like a risk-free position as well. So I will reduce the amount of money that I paid for this to bare minimum. So I will close my long my short put position, which will create just a long call. And once NEM reaches a level of, and I think I have it also here, a level of, that's not very readable, so let's go to working orders. I have a buy order or sell order on good till cancelled. So I'm just waiting until it gets to the point of 65 bucks. Okay, so if it reaches 65 bucks, which is very close here, I'm going to create a risk-free position for myself. And this is going to be fun, and I think it's going to be interesting, and we're going to reach that level. Gold is very bullish, and I recommend you play a little bit with the gold mining stocks these days. They will not go down. They will actually keep increasing, and in my opinion, it's a very good investment for now. So what else? I think that's all for this mentoring video. I hope you learned something from it, and I guess I'm gonna see you next week. So take good care and wish you all success with your portfolios.